a better than expected employment report. 1.37 million non-farm payrolls added to the economy, unemployment rate falling to 8.4%. And joining us now to talk a bit more about what to make of this report is Chris Rupkey. He's the Chief Financial Economist over at MUFG. So Chris, let's just start with the headline payrolls number. Let's back out the census. So let's go with the 1 million jobs added back to the economy. When you look at what the labor market has done over the summer months as we head into the fall, has the labor market exceeded your expectations? Are you still concerned about pockets of the labor market? And how do you kind of make sense of this setup when clients say, hey, what's going on?
Well, I can't really tell people what's going on right now because it's mystifying. The S&P 500 crashed 3 percentage points and now it's back. I mean, they're clearly not looking at the economy, are they, stock market investors? It looks like the labor market's coming back, and it looks like the speed is going to be roughly 1 million jobs created per month from now on. But, we're still about a good 11 million jobs in the hole. We lost 22 million payroll jobs in March and April to kick the recession off, been climbing back. But, there's still a lot of job losses out there. I have to say the statement from the Bureau of Labor Statistics kept emphasizing that, they said jobs are up today, but categories like leisure and hospitality are still down 2.5 million from the highs of the year. Business and professional jobs down 1.5 million from the highs of the year. Healthcare and education, I assume it's mostly healthcare services jobs, down 1.5 million from the start of the year. So it's still pretty bad out there, but I think Wall Street was taken aback by the fact that the unemployment rate dropped so quickly, more than expected.
And I guess in looking at that unemployment rate, I mentioned it at the top, I think there had been, because of the magnitude of the losses we saw in March and April, unemployment, I don't think the unemployment rate, I guess I should say, ever got to the level that some had expected. I think some people thought U3 was going to be 25, 30%. And here we are with U3 sitting at 8.4%. And I guess I would just ask, how much better than maybe a baseline expectation is that? And how much longer do we have this period where, as you sort of outline, investors are just making excuses for anything to be a positive read on any kind of economic data?
Yeah, I'm still pretty puzzled about, I know the stock market comes back before the unemployment rate comes back down to where it was always in every cycle. I just thought this was a bigger hole this time that we dug, close to being Great Depression style magnitude, 25% unemployment rate. I would say the unemployment rate probably got to 20% if they measured it properly. The BLS said that earlier. They miscounted people. I mean, it's pretty confusing for people taking the survey. They were supposed to tell people that no, they weren't working that week early in the recession, and they were unemployed, but they did not. So it was a little confusing. At the moment, the unemployment rate is 8%. 8.2%, right? But you have to add in the fact that this downturn occurred so abruptly. You have to add back people like those who dropped out of the labor force, several million there, and they haven't come back. They're discouraged. You also have to add back the people, ordinarily I wouldn't do this, you get into U6 sort of unemployment, which just makes people's hair stand on, and nobody wants to hear about U3 and U6. But anyway, I think in this cycle, you have to count the people who are working part-time only because they can't get full-time work. And they can't get full-time work because it's a bad economy. And they tell the surveyor that it's a bad economy. So if you add back in those people, those part-timers, and the labor force dropouts, the unemployment rate today, it's probably not 8.2%. It's probably 13%. But I mean, does that matter in the scheme of things to an investor? No, they're probably just looking at whatever the level it is, it's coming down, and that's what they're focused on. They don't care if it's 8% right now or 13%.
And then just finally, a number that a lot of people had focused on ahead of this report, and then we did, kind of see how things changed today, is the temporary layoffs. We're continuing to see the number of permanent layoffs increase here, which on the one hand would be expected, but I guess the concern would be, are we running out of steam with that snapback, which we expected? You expect you lose 25 million jobs, you might get 10 or 15 back. Are we running out of slack there, as it were, steam, as it were, with how aggressively folks will rehire as we kind of head into the summer here, with no path on stimulus and a lot of uncertainty about the virus, the election, and all else?
Yeah, that's kind of a new wrinkle in this recession. The fact that many people they're telling the surveyor of unemployment there that they're essentially furloughed, or they're expecting to get their jobs back. So that gives people hope. There's always a silver lining that unemployment will come back down once these businesses can reopen fully and rehire their workers. I don't know. That might be a false hope here. I don't know if we're stalling out. I think it's important that those $600 checks, unemployment checks every week, went away. The new program of $300 a week checks, unemployment benefits, it's getting off the ground very, very slowly. But there's so many cross currents here. I would just keep my eye on economic demand. I'm very interested in retail sales coming up here for the month of August, simply because those $600 checks went away. I want to see, do retail sales slow? Not only do they not slow, do retail sales fall in the month of August?
All right, Chris Rupkey is the Chief Financial Economist at MUFG. Chris, always great to get your thoughts. Thanks so much for joining the show.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.